people, how are you doing today? I know I'm a little late, but welcome back to another daily crypto news, where I am Paul Bucci here to tell you what's going on. All right, we got tons of news today. Billionaire feels FOMO. Dogecoin's not worth 36 million, and Max Keiser says Bitcoin will reach 500,000. So, or no, right, I say 500,000. I will hit there, but it'll reach 500% this summer. So let's dive right on in. Woo! Like right there, I felt like a moron for not buying Bitcoin, says billionaire Stanley Druckermeier. Let's see what's going on, Stanley. All right, so I just couldn't stand the fact that I was going up and I didn't own it, Stanley Druckenmiller confessed in a recent interview. Billionaire investor Stanley Druckenmiller has recently explained why investors only 20 million in Bitcoin, skeptical of Ethereum, and prefers to pretend that Dogecoin doesn't exist at all. For the first time in Bitcoin, I think from like $50 to $1,700, I just sat there aghast and I wanted to buy it every day. It was going up, and even though I didn't think much of it, I just couldn't stand the fact that it was going up and I didn't own it. Druckenmiller said that in an interview with The Hustle earlier this week. The problem Bitcoin solves a few years ago, Druckenmiller famously said that Bitcoin is a solution in a search of a problem. Since then, however, he evolved on this thanks to a couple of occurrences. First, he finally realized what problem Bitcoin aims to solve, and the problem was called central banks. So true. I found the problem when we did the CARES Act, and the Chairman Powell started crossing all sorts of red lines in terms of what the Federal Reserve would do and wouldn't do. The problem was Jay Powell and the world's central bankers going nuts and making fiat money even more questionable than it already has been when I used to own gold, Druckenmiller explained. Ultimately, Druckenmiller never owned any Bitcoin while the crypto price grew from $50 to $1,700 and felt like a moron. Then a fellow billionaire, Paul Tudor Jones, called him and said, "Do you know that when Bitcoin went from 1,700 to 3,000, 86% of the people that owned it at 17,000 never sold it?" Well, this was huge in my mind, so here's something. With a finite supply and 86% of the owners are religious zealots, I mean, who the hell holds something through $1,700 to 3,000? And it turns out none of them. The 86% that sold it add that this new central bank craziness phenomenon, Druckenmiller noted, an old elephant trying to get through a keyhole. Finally, he decided to buy $100 million worth of Bitcoin at around $6,200, but ran into some issues. However, Druckenmiller didn't explain what those were. Took me 2 weeks to buy 20 million. I bought it all around $6,500. I think, and I said, "This is ridiculous, you know, it takes me 2 weeks. I can buy that much gold in 2 seconds. He lamented, adding, "So like an idiot, I stopped buying it. The next thing I knew, Bitcoin is trading at $3,600. Ultimately, Druckenmiller took some cost and then some of his Bitcoin investment, but still held on to the undisclosed amount of BTC. My heart never been in it. I'm a 68-year-old dinosaur, but once it started moving and these institutions started upping it, I could see the old elephant trying to get through the keyhole, and they can't fit through in time," he argued. So he continues on with that article, but so true, where he was baffled on why he couldn't get the Bitcoin so fast. That's actually a big problem going on, where people think they can just buy it, get in really fast, but this is the people's token, so millionaires just can't go up nilly-dilly and get all this Bitcoin, 20 million, unless they did an over-the-counter trade. If you're dealing with exchanges, I remember a time when I think it took like 2 weeks to get like a certain amount of, let's just say a certain amount of LTC, and we're just waiting, like, where is it? Where is it? So I'm assuming the issues he came across was dealing with exchanges. Because when you deal with exchanges, they don't really want you to take their cryptos off their network. They want you to keep it with them. They want to be full control, no private keys, no seed phrase. Just trust us, give us your money. So that might have been an issue. But even on the exchange side, it takes some time to get Bitcoin. If you have an over-the-counter broker, their max trades are 100,000. That's what mine is with Caleb and Brown. Lowest is 2,000, max is 100,000. So if you're trying to get $20 million worth of Bitcoin, that's about 20 transactions, and it usually takes about a day per transaction when you're on the phone with these guys. So 20 days worth, there's your 20 million Bitcoin. Easy as that. Unless you want to go to exchange or private decentralized network and try to throw your luck there. But yeah, you don't know if they got the Bitcoin or not. So yeah, there you go. Take your options. Wait or trust the exchanges. Yeah. But that's the billionaire falling into FOMO. Let's move on with the news. Do we really care what Elon Musk has to say about Bitcoin? Ha, no. But let's see what this article has to say. Look at this nice little artwork they got going on. A little boy swinging, beautiful stars in the Milky Way galaxy. Just awesome. But what's that got to do with Elon Musk? It's supremely disrespectful. We embraced him, Musk, with open arms, and he kind of just trashed it. It felt very trolly. It was just ridiculous. That's what Musk did. The Bitcoin is bigger than Elon. Bitcoin is bigger than anyone else. The market now knows that he's just a jerking around. We don't really care about what Elon has to say about Bitcoin anymore. Well, these big folk who come in a swing around are going to lose influence pretty fast. So true. We should push back the narrative that Bitcoin is wasteful or dirty. It's completely ridiculous and a double standard narrative. At the end of the day, Musk may come and Musk may go, but Bitcoin will be forever. So if you want to take a look at this article, by all means, it's on the AMB crypto website. Just go on Google, type in, do we really care what Elon Musk has to say? And you'll get this article. And for me, I don't care what he has to say. I know I'm just holding on because I know what Bitcoin can do in the future. So let's move on. Flash loan strikes Belt Finance, exploited $6.2 million. Woohoo, what's going on here? The hacker managed to steal $6.2 million worth of BUSD, the Binance native USD pegged stablecoin, converted to Ethereum via 1-inch DEX and partially withdrawn from Binance Smart Chain onto Ethereum. This hack was comparatively benign. Only 6.2 million was stolen from Belt Finance, massive 2.6 billion total value blocked. The Belt BUSD vault uses 4 strategies. A bug in the ellipsis strategy was used to leak out funds via the Venus strategy. The vault sends new deposits to the most undersubscribed strategy and pays out withdrawals from the most oversubscribed strategy to create balance between the 4 of them. The ellipsis strategy bug created a value miscalculation if the 3 EPS pool became unbalanced. Using flash loans, the hackers swapped about 200 million from BUSD to USDT, unbalancing the 3 EPS pool and activating the ellipse strategy bug. The 4 belt pool at the point would have overvalued the hacker shares, paying out an additional 0.5% profit after the conclusion of the flash loan. This resulted in a 1 million profit from a single 200 million flash loan transaction. The hacker repeated the transaction multiple times, netting 6.2 million in profit and causing a 13 million in total loss, since 6 million in fees were paid to the 3 EPS pool. Along with other recent hacking indictments in the Binance Smart Chain ecosystem, this hack has led to a condemnation of a fork culture, where entity code bases are replicated through audits. This issue has led to several flash loan attacks over the past few years. Woo, yeah, so hackers are going to get money. At least they got it from an exchange and not a person. But all in all, hacker is bad. Don't do it. So yeah, Binance, I want to see, or who is it? No, Flash Loans. They're the ones who got pretty much messed up from this. But yeah, crypto world, people want it. They're going to do whatever they can to get it. That's all I can say. Be safe, people. Keep your money protected. Do your due diligence. Be smart and do your research. Let's move on. UK bank Starling bans cryptocurrency exchange deposits due to suspected financial crime. Starling told Decrypt it has barred deposits to cryptocurrency exchanges while it deals with high levels of suspected financial crimes. Here's a little Starling bank with a MasterCard logo. Hey, look, is that Big Ben? Oh, no, it's not Big Ben. I do not know what those towers are in England. Starling, a UK digital bank, has barred its customers from sending money to cryptocurrency exchanges. Withdrawn aren't affected. Other UK banks continue to allow deposits. A British digital bank has temporarily barred its customers from depositing money to a cryptocurrency exchange over concerns about criminal activity. This is a temporary measure that we've taken to protect customers, having observed high levels of suspected financial crime with payments to some cryptocurrency exchanges. Starling told Decrypt that this is just not an issue for Starling, but for all banks. Starling said that it will reverse the ban as we roll out additional checks specifically for payments to crypto exchanges. The spokesperson declined to comment when the bank proposes to lift the ban. However, the bank confirmed that only deposits from Sterling accounts to crypto exchanges are barred. Customers can continue to withdraw funds from crypto exchanges into Sterling accounts with no restrictions. Sterling is a mobile-only bank launched in the UK in 2014. Other UK banks have not taken similar stance. Barclays told Decrypt that it has not blocked transactions through crypto exchanges, and contrary to customer difficulties reported by The Telegraph yesterday, Decrypt had no problems transferring money from Monzo to Binance on Sunday afternoon. NetWest has since Thursday warned customers against crypto traders, promising big profits and offering to help. The bank has not placed any restrictions on crypto traders. It advises customers only to deal with crypto companies fully registered or temporarily registered with financial conduct authorities. Only 5 companies are fully registered: Ziglu, a crypto-friendly bank founded last year by Sterling co-founder Mark Hipster, and Gemini Europe Services Ltd, Gemini Europe Ltd, DigiVault, and the Arcax. While a further 167 crypto companies have outstanding applications, John Glenn, MP from the Salisbury on Friday, told Parliament that 90% of all companies who have applied withdrew applications following FCA intervention. Okay. Ooh, big mouthful. Yeah, so they just banned it. Suspected of cryptocurrency. It's not totally banned. They're still using it, but they're more pushing that they use their exchange that they created. So, yeah, they don't want you to use other people's stuff. They just want you to use theirs. And that's what we're going to start seeing. A lot of banks might be doing this. They're come out with their own exchange, their own thing. And, yeah, that's how the world's going to go with the crypto. They're going to try whatever they can to keep in control of your money. Yeah, that's banks for you, the big criminals. So let's move on. Bitcoin mining gets 16% easier as Chinese miners anticipate crackdown. As the Chinese government prepares to crack down on Bitcoin mining, the mining difficulty suffers its greatest decrease this year. In brief, a Chinese government crackdown on Bitcoin mining is scaring off miners. The mining difficulty fell by 16%. Bitcoin mining difficulty fell by 16% on Sunday to 21 trillion, the sharpest decrease this year. The question suggests that Chinese miners are pulling the plug in advance of further crackdowns on mining by the government. Bitcoin mining difficulty measures how much computer power is required to produce new Bitcoin. The network adjusts the difficulty roughly once a fortnight to reflect the level of competition among miners. Lower mining difficulty indicates less competition. So, woo, yes. So since we got that word of the Bitcoin mining in China, of course it made it easier. So way to go. This is some good news. So yeah, if you're becoming a miner in the US, take advantage of this. It's getting a little bit easier. Get what you can from what's left of the Bitcoin. Alrighty, what's next? Dogecoin is not worth $37 billion, says crypto king Barry Silbert. I agree. Here's a little inspection of the Dogecoin. Digital Currency Group CEO Barry Silbert has doubled down on his criticism of Dogecoin. During a recent Twitter spat with Billy Marcus, the co-founder of the meme crypto, who tweets under the Shibatoshi Nakamoto handle, Silbert wrote that Doge wasn't worth $37 billion. The crypto king claims that the coin's value comes from a collective belief instead of any sort of utility. On May 5th, Dogecoin's market cap surpassed an eye-popping $90 billion. On May 8th, Silbert announced that he shorted the joke coin while urging his holders to convert their proceeds to Bitcoin. Tesla CEO Elon Musk had his Saturday Night Live hosting debut on the same day, which ended up being a typical sell the news event. Doge tanked over 30%. While Dogecoin has so far failed to recover, it remains 7th largest cryptocurrency with a market cap of $39 billion. But Doge is here to stay, I guess. Even though Silbert has emerged as the archenemy of Dogecoin community, he admits that the canine coin is here to stay because it has one of the most passionate communities. The Dogecoin subreddit recently surpassed 2 million followers. Only Reddit Bitcoin can boast a higher number of the followers among coin-specific subreddits. Earlier this year, Dogecoin has surpassed Bitcoin in Google search interests. Yeah, so Dogecoin is here to stay, but it is not worth $37 billion. I think it's worth a penny, honestly. That's me, but yeah, it's a meme coin. It's a Shiba Inu. We love the joke. Let's just move on. But yeah, that's just that news. Here's why central banks could add Bitcoin to their balance sheets, according to Cathie Wood. Ooh, Cathie Wood of ARK. Let's see what you got to say. Cathie Wood, founder of global assets management company ARK Invest, says she sees a scenario where central banks could start accumulating Bitcoin and other crypto assets. In a new episode, the Breakdown podcast, the superstar hedge fund manager says her firm believes that deflation, not inflation, will hit global markets as consumer demand shifts from commodities to services. We are thinking that much higher probability is deflation. I know most people think that's crazy given that what's going on, but we have seen a crack in some commodity prices already. Lumber, an important one. What we think has happened here is consumers have spent the last year spending their money on the only things they could, and those are goods, durables and non-durable goods. Businesses were behind the curve even before the coronavirus because of the inverted yield. They were afraid of recession, so they were fearful and positioned conservatively. Consumers took off buying goods, and now being vaccinated, they're going to shift their market basket from goods to services. So I think that's what's going to happen here is business, which may be double and triple A quadruple, ordering right now to try and get supplies. They're going to get those supplies as the market based is shifting towards services, and I think commodity prices are going to have a significant fall into next year. With commodity prices sinking as businesses try to get rid of excess supply, Wood predicts that the emerging markets will take a massive hit, she adds. That the effects of deflation will cascade into the fiat currencies of emerging markets, which will drive the central banks to seek refuge in Bitcoin and other cryptocurrencies. I think, though, in emerging markets, if commodity prices come down a lot of them linked to commodity prices, their currencies will come under pressure. I think what will happen as currencies come under pressure is the velocity of their money will increase as more and more of their population shift into Bitcoin and other cryptocurrencies and assets. This is always true when you're talking about currencies, inflation, deflation. It hits different regions of the world differently. I wouldn't be surprised if some of these emerging markets, central banks started to accumulate Bitcoin and other currencies. If they know their currency is going down and that they would be under attack for as reserves go down, maybe they have balance sheets with Bitcoin and other crypto assets. So yeah, market's going down, deflation is hitting, and what are you going to do? Banks are going to start collecting Bitcoin. We already know this. They're offering it to their clients coming this summer. So get it while you can, people. It's going to run out. And I know they always start saying, people start stacking your savior's pennies. I say stack your Satoshis because that's what's going to be the more dominating market of the future. Let's move on. Ethereum developers close EIP 1559 loophole that could have overwhelmed the blockchain. Ethereum developers quickly patched up EIP 1559 a month and a half before it's set to go live. Ooh, Ethereum, we got some upgrades coming. In brief, the Ethereum developer Martin Holst identified and suggested a fix for a loophole in EIP 1559, a major upgrade scheduled for mid-July. The loophole, if left unfixed, would have allowed for fake large transactions that could overwhelm the network. Ethereum developers have fixed a loophole in forthcoming upgrade that would have left the network vulnerable to fake large transactions. Scheduled for mid-July, EIP 1559 burns some Ethereum spent on processing transactions instead of giving it all to miners, as is currently the case. The proposal aims to reduce the volatility of Ethereum's transaction fee. Under EIP 1559, users can tip miners in the Ethereum network to speed up transactions. To do this, they specify the maximum amount they are willing to pay. Martin Holstvent, an Ethereum core developer from Sweden, worked out on Thursday that EIP 1559 placed no limit on the maximum amount a user could pay to speed up transactions. An attacker could thus insert an absurdly high number to overwhelm the network, even if they didn't have the funds to pay for the tip. Because the fields in 1559 are maximums, you could have used this, not actually pay those huge gas values, and spam the network. Ethereum core developer Tim Giecko tweeted Friday, let's see, we started with a lot of action. MH Fuente identified an issue, EIP 15 yesterday, where the new fields introduced transactions, max fee, and max priority fee. Did not have an explicit cap. This means that an attacker could create arbitrary large transactions. So yeah, prior to the 159, this is not possible because if you want to create a transaction with a huge gas price, you actually need to have that amount of Ethereum, and if your TXN is included, you will pay that amount. To close that loophole, developer implemented a solution proposed by Sweden, 4 lines of codes that cap transactions of limit of 2 to the 256 power, a widely used cryptographic hash function that also underpins Bitcoin. On May 14th, Ethereum developers agreed to delay until December a difficulty bomb that would make several slow down the network. The difficulty bomb is designed to encourage Ethereum developers to hasten to development of Ethereum 2.0, the long-awaited upgrade to the Ethereum network that would reduce fees and increase throughput. So yeah, this was in the works and they fixed it. Good job, Ethereum. You definitely needed that before 2.0. You're taking your sweet time on it. We the people want it. So I'm glad you're able to solve that issue. Woo! So let's move on with our final. Sorry if it was late, but let's move on to our final article. Bitcoin will surge to 500, says Max Keiser. Here we go. This year, as a tsunami of cash comes back to the crypto. Let's see how this is going to happen. Look at that. Bitcoin's exploding. That looks pretty cool. I love that artwork. It's like an apocalypse of Bitcoin. So early Bitcoin investor and proponent Max Keiser is undeterred by the recent crypto market crash. In a new interview on the Wolf of All Streets podcast, Keiser says massive money printing and fresh signs of inflation will force companies to increasingly buy BTC this year. He sees corporations taking part in Bitcoin buying spree that fuels a 500% price surge by the end of 2021. When corporate America really runs out of room to finagle and to escape the Bitcoin reality, they've got to make the move. I think if it happens in 2021, my price target for 2021 is still 220,000 per Bitcoin. It's an aggressive price target, but it's based on the US dollar running into severe trouble. Keiser points out to MicroStrategy, initial 1 billion Bitcoin purchase, spearheaded by CEO Michael Saylor as the tipping point of an era to corporate investment in Bitcoin. He's thrown down the gauntlet, and so now every CFO and every CEO and every board member of public company now has to take that on board. Keiser also highlights comments from legendary institutional investor Paul Tudor Jones, who says BTC is a digital form of gold that's like the fastest horse in the race of an era inflation. Institutions realizing that inflation is in fact not transitory, it's secular, it's structural, it's here for the long haul. And if you're not protecting yourself, you're going to be wiped out. And as Paul Tudor Jones said about Bitcoin, it's the fastest horse in the race when he's comparing it to gold, for example. So you get this wave, a tsunami of cash comes back into Bitcoin. So yeah, woo, that's what Max Keiser says, 500% Bitcoin. I am looking forward to that time. So I hope you've been stacking up on your sats as well. And the cryptocurrency market cap going on right now, Bitcoin's currently at $34,740. Ethereum's at $2,300. Binance is $308. Dogecoin's $29. Uniswap is at 23 cents. Let's take a look at who the gainers are in the last 24 hours. Xfinity Network, really, it is up 17%. The Graph going up 15% is now at 70. And Compound is up 12%, 393. Engine Coin's at $1.47, up 12%. Near Protocol is at $298, up 11. So, ooh, coin market cap, lots of price tags. Ha ha ha. All right, and lastly, the Fear and Greed Index. I always love looking at this every day to see where we're at. And right now, we're at an 18 in extreme fear. Yesterday was an extreme 10, so we went up in fear. People are getting less fearful. But when we have extreme fear, that can be a sign that investors are too worried, and that could be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So yeah, there we go, people. That is the news. It is getting dark. Look at me. I am yellow. Well, if you like this video and you stuck around, please give this video a thumbs up, subscribe, share with your friends. Go take a look at my Patreon. Bam, up there. I'm going to be working on a video later tonight showing you how to use simpleswap.io. So if you're into cryptos, that's one you want to watch. Alrighty, people. I will see you tomorrow. Have a great Memorial Day. And see you then. Have a great night, morning, afternoon.